Further signs of a shrinking economy were evident in the June factory output reports for both the Eurozone and Germany. Each report showed its fastest decline in 3 years. Barclays chairman stepped down this morning after the bank accepted responsibility for an interest rate price fixing scandal last week. I'm Lindsay Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. Overnight and over the weekend, we saw manufacturing data slow down from Europe to China, but this morning our markets look like they're going to open flat.
I think the momentum from Friday is going to continue. You have a big dynamic going on here. You had end of the quarter. You had the news on Friday that was, taken as a surprise because every media outlet in the world basically said that nothing was going to happen, and then they put together that fiscal framework. A lot of people are calling it their version of the TARP. So I think the hope of that working is trumping all the negative news, because there was like 9 to 10 pieces of news this morning showing global growth slowing. But this time, if you look at the chart of the S&P, you will see, with the end of the quarter, with new flows coming in, it might not matter just yet. If you recall the pattern we've been showing you here, this inverted head and shoulders with the left shoulder, the head, the right shoulder, we talked so many different times about if this 1306 to 1309 holds, there's still a chance that we can continue to rally. This was also the Fibonacci level, the 61.8% retracement, and lo and behold, you had some market-friendly news, and look at this ignition. So I think short-term guys are going to want to see the market hold above about 1350. And if we can continue to hold up here, I think once we get above this recent pivot that we had at 1363, you will get this measured move we talked about, and that could be about 1380 to 1390, and it could happen quick in the holiday week.
Right, in the quarter, as you mentioned, you brought it up that the second quarter we ended down 3%, but June was up 4%. So where do you think we go in the third quarter?
It just shows you how you have to time the market. And it all depends on your time frame. And from a macro stance, the market's acting very well. We had an unbelievable first quarter. We came into the second quarter saying switch gears, go from a portfolio approach to more of an intermediate tactical approach. So we were down 2-3% for the quarter. But overall, the market's held in there really well, even if you just discount all the noise going on everywhere else. If you look at the chart again of the SPX, you will see, if you go to your weekly chart, we're still in a pattern of higher lows and lower highs that have been taking place from the low here in 2009. Here's a low, a higher low, another higher low. So it does seem like even with all this negative environment, at some particular point, we're going to get a trade above this 1400 on a macro stance. So you have to have a long-term equity stance. So what I'm suggesting is you have to have macro positions. You have to have a long-term 401k, 529B, be a stock picker. And then you could also trade intermediate if you're a professional looking to dissect some of these moves.
And we've seen some of the stronger go-to stocks really bounce on the news on Friday, like Apple and Amazon.
You saw Apple, Amazon, you saw eBay, you saw a lot of semiconductors. So really, the go-to stronger names acted very well. And even in the last few weeks, we saw some participation from the ags. They started getting strong again with the big crop report. You saw the oil names actually start getting stronger ahead of the commodity bounce that we saw on Friday. So you could have tactically looked for cash flow, or you could, on a macro stance, held your positions. So all in all, something for everyone, but you have to look for it and you have to have your eyes open versus shut.
Do you think this means there's going to be some new trends in those groups that showed some strength, or is it a short squeeze?
Well, a lot of people thought the ags were a dead cat bounce, and meanwhile, you look at the chart of MOO, it had a really nice move off the lows. You go to your daily chart of this indice, and you will see ever since this low here from about 44, look where we went to, almost 50. If you look at the OIHs, we talked about this mini reversal right here, around 33. It's now coming into resistance, but it was pretty spirited. But then again, you look at the leadership groups, those are the ones you want to stick with on a macro level. They're near highs. They give you less pain, but you could approach all of them as long as it's tactical.
Yes, be tactical. We're going to get into all this more in the long-form version, so stay tuned.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.